Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 20th day of January 2015, and this is the daily report for gold and silver. Nice upside move, continuation in this rally that we have seen in the precious metals. Precious metals up across the board, first to gold. 1292 and change, call it 1293. It's had a high of 98.20 and a low of 75.40. Currently trading up about 1% or $12 higher on the day. Silver also showing a nice gain, up about 0.65%, but it is up about 12 cents on the day. Well over 17, just under 18 at 17.92, the low 60, the high 18.15. More on silver in a little bit, but first let's talk about our trade alert that we sent out this morning, in which we recommended moving our stops up. So traders, first I want to address the trade alert that we sent out this morning. We did make recommendations to tighten our stops. We've got some substantial profits in the market. I want to make sure that regardless of what happens today, tomorrow, day after, that we at least protect some of these profits. My sense is that we're in a full-blown rally, and we absolutely identified a technical breakout that occurred roughly at 1217. That's when we entered the market upon that breakout. Now, as this market has moved up, we have also trailed our stops up behind that. So when we entered the trade, and I've moved back to our 720-minute chart, there were a multitude of factors that precipitated the actual recommendation. But one of the strongest ones was the fact that we broke above this key point, this resistance line that we had identified. Now, the market did come down. Now, we initially had our stops just below 1200. That would be right here. The low that the market came in during that period, because it didn't just move straight up. It did come down, but it never came close to our stop, and then really broke strongly through this market. As the market moved up, we kept our stop there, but as it started to move up into the area of, call it above 1231, because that was a pretty critical number, we then moved our stop, trailed it up to just behind 1225. Now take a look at this most recent rise. It's almost a straight vertical rise in the market. And so in terms of moving our stop up, we could move our stop. The tighter stop that I was looking at would be to move it roughly below 1274, but instead I moved the stop to just under 1257. And let me show you what that is based upon. We have a single fib retracement, and that fib retracement takes us from 1130 on the bottom to a 1296 on the top. We're at 1293. When we do that, our 23% retracement comes in roughly at 1257, and you can absolutely see a little bit of support here because it had a little bit of a consolidation period there. Now, we've also gotten some consolidation right in here, which is roughly at 74. So you could, in fact, move your stop up tighter to 74. I think that that's a little bit tight, although it's $20 away from the market. For right now, on paper, 1257, but we are looking at this spot roughly at 1274, and of course that's based upon a couple of other Fibonacci retracement studies. So much of the hoopla, much of this most recent rally is due part and parcel to the meeting, the European Central Banking meeting, and comments that we will see that Mario Draghi makes on Thursday as to whether or not they're going to initiate another round of quantitative easing. Of course, we've seen what that did to the markets. We also had the scenario last week where the Swiss National Bank depegged the relationship between the euro and the franc at 120, and that sent the markets into a tumble, so to speak. But today we have not only the dollar index higher, but the Standard & Poor's index higher. This, of course, is the dollar index, 93.31, up substantially and up strongly on the week. Traders, we're looking at a 720-minute chart. This is the E-mini, the Standard & Poor's 500. As you know, we are just ramping up to start a trading service with the S&Ps. We'll give you more information as that comes available, but there's no doubt it does seem as though the market, at least on a tentative basis, at least short term, has found some support at this 1985. Market's currently trading at 2016. So it's absolutely off of these lows that we saw. The question is whether or not they're going to hold. It's a little bit too early to tell if we've actually gotten this market finding support in this area, or if we're just looking at a counter wave up to this recent decline, followed by another move down, because we still haven't had any kind of sizable retracement in the stock market. We'll have to see how that unfolds. Next, we take a look at oil. Now, on oil, oddly enough, I've been using this monthly chart just because we've had such a dramatic sell-off in the market. We've also identified two key areas. We've got one fib retracement, which really begins up here at 115, down to this bottom at 31. We have another fib retracement, which begins at this record top, and that goes down to 17. That's based upon these falls. When I do that, I get different areas. And what I found that was interesting was the 76% retracement in both of those. This is a harmonics, of course. And my thought was that if we were to find some support in oil, this would be the area that we would look at. Now, the market absolutely drove well below that, as you can see right here, these lows, but it is trading now just at that point. It is down on the day, it is down on the week, it is down on the month. But my question is whether or not we will find support in this particular area. So traders, lastly, let's take a look at silver. Silver, of course, has been flying. We've got great profits on this position also, along with our current gold trade. Now, I moved the stop this morning to just below 1748. This is 1750. Let me see if I can put that in as straight as possible. The reason for giving this quite a bit of what I'll call wiggle room is the fact that I needed to put this a daily chart. I try to put it below the lows of the last couple of days. Of course, if we're going to put it below a 3-day low, we're back here at 1700. So it really doesn't account for much because we had this dynamic move, of course, on Friday as that market came up. I believe it was Friday, 3 days ago, though, on the market. But I really believe that if it's going to continue, we don't really have any real resistance. This is what we mentioned yesterday, any real substantial resistance until about 1850. Well, we're now seeing how it's going to react at $18 being at 1793. So for the moment, I'm comfortable with our stop at 1748 on silver. 1257 is our official stop in gold. But as I pointed out, traders that want to move that tighter, I've given you the point in which you can move it to, which is around 1274. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.